Welcome to an abbreviated edition of the daily video update. I want to apologize that some of these videos are a lot shorter than what you're used to seeing. I have a convergence of things going on right now that's preventing me from making the longer videos. It's probably going to last at least another week. And there are things that are out of my control, things that are in my control that are still going to take some time. And so I apologize for that. I heard from some of you saying that you like the longer videos. That's great. And I like doing the longer videos too. It's just that it does take quite a bit of time to do that. And it takes some resources that I don't have access to right now. And as soon as I can line both of those things back up, I will be able to do the longer videos. I'm just trying to go through and pick out some of the charts that I think are telling us something right now. What you see in front of you is a 1 minute chart because yesterday, as expected, the Fed came out and raised interest rates 0.75%. And the market seemed to like that. It was a little bit scary at first because overnight the futures have been up anywhere from 0.75 to a full percent. And I thought, oh, maybe it's some kind of a buy the rumor, sell the news trick that's going on. But that's not what ended up happening. We're looking a little bit overextended with some of our charts because we had such a strong up day, but our scenarios still seem to be really hanging in there. And I'll have some charts to show you of that. And the market really liked what it heard. Now, what you see in the 1 minute chart here is right, this initial gyration, that's when the announcement came out, right at 2 p.m. Eastern. And then 30 minutes later, this is when Chairman Powell started the news conference, and apparently they really liked what he had to say. So we just ended up shooting higher and higher with growth pretty much leading the way. So let's go look at some of the other charts. Here's a daily chart. Now look at this gap. We're kind of right in this gap right now. If there's a way that we can break through and close above this, that would be very positive. But we're also kind of right at the underside of this gap, so this might be acting as overhead resistance. Since we did overextend it a little bit, don't be surprised if we have a little bit of sideways to even down action on Thursday, but we're going to be watching that. If it really turns and goes more negative, that could shift the picture a little bit. If we just see some sideways to slightly down action with no real conviction behind it, well, that's okay. That might work off some of these other charts. You can see down below that volume did pick up to at average right now. So things are still pretty slow overall. Here's one of our positive possible scenarios or possible whatever, however I say that, where we did get extreme and we're still bouncing up out of this. Now, this is based on the 200 period moving average. Those stocks in the S&P that are above that average, and when it gets extreme negative, a lot of times that marks a bottom. Well, we're starting to continue to bounce up out of that. Another thing on a shorter term basis with the 50 period moving average is after going extreme negative in the S&P, we're bouncing up out of that. The nice thing about this is we're also seeing a confirmation with the mid caps after going extreme negative and also with the small caps. So that's more across the board confirmation that we're seeing right now. The other thing is the equity put call ratio, 5 periods, the longer term chart. After spiking up, we're still coming down. We were lower than this before, but we're still working off of this spike. That is still valid as of right now. And many times that has been at or near a significant low in the S&P 500. Our sector rotation really improved on Wednesday. Growth really did well. And with the QQQs, that's growth against the SPY, that really turned back up, as did the discretionary and the large cap growth against large cap value. And then on the next page, we're seeing pretty much the same thing with the large caps, mid caps, and small caps. The growth value ratio, it is showing an improvement. So this scenario is still holding up, and we're starting to see a little bit more positive action coming into the market. You have a lot of people that just don't believe this. They think that this is just a dead cat bounce, that we're working this off before we're getting set to go lower. And that could very well be true. But under the surface, we're also seeing some different things that could end up being quite positive. Here's the short-term rainbow I don't have the intermediate or long term. This is the 10 through 50 simple moving averages, where we're coming out of the upper side of that rainbow now. So this is showing a lot of improvement. We're also seeing a pretty strong inverse correlation between the dollar and the SPY. So if the dollar index is up, the SPY or SPX is probably down, and the inverse of that is true. So this is what I watch. I watch the USD. That's the US dollar index. There's also a DXY, which is another index. I don't use that one as much, and it's based on a different calculation period. I've used the US dollar index for so long that I just stick with that. But you might want to keep an eye on that. You'll want to also keep an eye on the NASDAQ 100 and the NASDAQ itself, because those are more the growth areas. There's one area that I saw that a little bit of a concern with the Swinland trading oscillator. See how it's declining based on price and volume, even though we're having a pretty solid up move? That's kind of strange to see that happening. And sometimes this indicator gives us some insight. Here's what I'm looking about on an overdone basis, where the rate of change going back just one day, it's looking a little topsy right now. And even 10 days going back, we're looking a little extreme at this point. Here's our moving average tree. We're starting to get above not only the 20, but the 50 period moving averages, but we still have a ways to go to get up to the 100. And I apologize if there's noise you're hearing in the background. The small caps to the S&P ratio, it had a pretty good day as well. And we're seeing on this red chart a little bit of a spike up, and that can often give on the blue chart, which is the S&P, a bit of support to go higher. And then here's our staples to S&P 500 ratio. The ratio did go down a little bit after spiking up a little bit yesterday. So we're still working off of this third spike. This looks legitimate so far. So right now, this appears to be holding up. Another thing that's interesting is even though they raised interest rates, look at what these interest rates are doing. These are the treasuries, and they're actually declining. There is a scenario that's starting to come out that suggests that maybe inflation has topped and the market's starting to see that, and inflation will be coming down from here. Now, we got spooked by this before. Not long ago, this same scenario started to develop and it turned out to be wrong. So we want to be careful with this as well. So anyway, I hope that you have a very good Thursday. Again, I apologize that this is shorter and much different than the format I usually use. I hope you still find this helpful. Have a really good day, and I'll prepare what I'm able to prepare before Friday's session.